Let's move in to talk about the topic at hand. That would be this new era of tariffs that has begun. And what I want to do is I just want to talk about what we know right now. You may know that tonight we're going to have President Trump delivering a speech to a joint session of Congress. It is not technically the State of the Union, but it's going to be very similar to one. President Trump will be outlining what his accomplishments have been so far, and obviously talking about some of the things that are going on now. We know that President Trump is very excited about tariffs, and so therefore we need to kind of explain what's going on here to help you understand what's going on. So let's just talk briefly about this new era of tariffs that have begun and some of the things we should know right now. So first of all, you probably know that the U.S. has officially now imposed 25% tariffs on imports from Mexico and Canada, right, two of our closest trading partners. He's also added an additional 10% tariff on Chinese goods on top of the previous duties that were already implemented. So we've already seen Canada and Mexico immediately retaliate with their own tariffs targeting certain U.S. exports, including agriculture, which is not good for the farmers out there, and for consumer goods, which Best Buy is warning about, and Target as well. China has also followed suit with new restrictions on U.S. farm products. Okay, that's not good for farmers either. And they've also blacklisted certain American companies like Illumina and their gene editing system. Now, we really have kind of coming to the end now of what has been a decades-long free trade with America's closest trading partners. So we really are witnessing a major shift in global economic policy, and we're seeing a reversal of the trend kind of towards more open markets. And this, quite frankly, this is one of the largest tariff escalations in modern U.S. history. Right? It's disrupting decades of trade liberalization under NAFTA, under the USMCA. And, if this lingers, which we're going to talk about in this brief section here, if this lingers, then this shift towards protectionism is very likely to have long-term implications for global supply chains. And that is really what is irking investors, I think, right now, Wall Street. Right? Now, what's the immediate market reaction? Well, it's been fear and it's been volatility. So right now, as we speak, the U.S. stock market is down again. We have the Dow Jones down about 1.7%, the S&P down about 1.7% as well, the NASDAQ 100 down about 1.2%, the Russell 2000 down about 2.2%. And the dollar is also down, but the VIX is up. The VIX has shot up rather nicely here amid this latest scare. Gold prices, as I mentioned, are also rising in this, kind of reflecting that move towards safe haven assets, although the dollar is not getting a bid, which is somewhat interesting. Again, as we're seeing Treasury yields drop, we're seeing a move into bonds. We've been calling uptrends in bonds now for a little bit. A couple of weeks ago, we told you about VCLT forming a new uptrend. This Robinson report issue, we detected a new position uptrend in TLT. Both of these have been really beaten down, and they're just beginning to rise as money flows into bonds, as rates come down, right? The rates are coming down. This is exactly what the Trump administration wanted. They wanted the Fed to cut rates. Rates were elevated. How do you get the Fed to cut rates? We talked about this, didn't we, just 3 or 4 weeks ago. One of the ways you get the Fed to cut rates is you create a scenario where the Fed has no choice but to cut rates. Maybe we are at that place. In fact, this morning, I was noticing that the Treasury Secretary, Scott Bessent, had made a comment that the Treasury is working on lowering interest rates. Okay. Now the Fed is the one who, of course, who sets interest rate targets. But the Treasury is now moving right along and trying to bring rates down through its tools. And certainly the tough talk from the Trump administration is also helping bring down that dollar and causing yields to go down while bonds go up as people look for safe havens. So we're certainly seeing that develop right now. We also have global markets like European stocks, especially auto manufacturers like Volkswagen, Stellantis, another one, selling off sharply because of the potential supply chain risks. So when you think about it, you really have higher import costs, right, for the United States, right? And then you have slowing growth. So what does that mean? Well, you have inflationary pressures and slowing economic growth. That is called stagflation. Right? That is a stagflation risk. So if these tariffs stay in place, then we could expect to see inflationary pressures rising in March, in April, in May, just as the GDP growth turns negative. Well, that's a toxic combination for markets and businesses, of course. So we are seeing ripple effects from these tariffs and from the actions that we're seeing. So consumer prices are expected to rise as companies pass on the higher costs that they must pay for the tariff to consumers. So retailers, like I mentioned, Best Buy and Target, they're already warning that prices for electronics and other consumer goods are going to go up, right? In fact, in some cases, maybe in the next few days. The auto industry, of course, is also getting hit. As I had mentioned, tariffs on Canada and Mexico are leading to some vehicle prices going up pretty high. Costs are projected to increase by $8,000 to $9,000 per vehicle, according to a few government outfits. And that's coming from the government itself. So it may be higher, right? So costs projected to increase by $8,000 to $9,000 per vehicle. Right? We also have, as I mentioned, farmers taking a hit here, U.S. agriculture. China's retaliatory tariffs are aimed directly at U.S. farmers, right? One of the biggest voting blocks for President Trump. They're targeting crops like soybeans and wheat and corn and cotton. And so you're going to see more pressure here on a sector that's already been struggling. However, these tariffs that are targeted against these U.S. farmers are causing some of the prices to fall, i.e. inflation is also going to be helped by that. Right? So we do have an interesting situation kind of playing out. We have these global trade tensions that are escalating. So when we look at China, China is playing, in my opinion, the long game. Right? Their response has been measured. It's been strategic. They've introduced some very targeted tariffs and restrictions on some U.S. firms, but they've left room for negotiation, right? We saw, for example, the U.S. biotech giant Illumina banned from exporting gene sequencers to China. We also saw Beijing blacklist multiple U.S. companies in response to the latest Washington tariffs from Trump. Now, Mexico has yet to announce its full retaliatory measures, but analysts are expecting that it's going to target very politically sensitive U.S. industries. So this is potentially going to get nasty, right? Potentially. And I want to stress that word potentially because there's still a little bit of time here for Trump to walk it back. And quite frankly, he has done that before, if you remember his first term. So if the outcry becomes large enough from these very politically sensitive industries, then you could see a walk back. We'll talk about that in a minute. But also, you know, if you look at what China's doing right now, their response is not just slapping tariffs on the United States, right? Commensurate tariffs. They're actually engaging, I think, in some strategic economic warfare. I mean, they're doubling down on state-sponsored industrial policies. They're boosting subsidies for domestic industries like electric vehicles and semiconductors, which is going to make U.S. competition harder in these industries. So China is not wasting this moment. We also have economic growth slowing, as I had mentioned, which is raising the risk of a recession. For the last 4 years, everyone has been talking about this phantom recession that they expected to arrive. How many expected it to arrive in 2025? Not the last 4 years. So here we have now the recession that many have been fearing and fearing and fearing and fearing, now suddenly beginning to appear. How about that? The Atlanta Fed has a GDP tracker, and they're forecasting a 1.5% contraction in U.S. economic growth in Q1, which, if that happens, that's going to be the first negative quarter we've had in the U.S. since 2022. You have consumer spending dropping sharply in January, right? So there's concerns that these higher tariffs are going to worsen that. You have business investment slowing due to the uncertainty about long-term trade policies, right? It's hard for manufacturers and exporters to plan ahead when they don't know what's going on. You also have Europe and Asia potentially slowing down too from all of this, right? So the IMF is warning that, a full-scale trade war, which we're not fully in yet, but I mean, it seems like we're moving that way. That could worsen the recession risks, not just here in the U.S., but worldwide. And then, of course, there's the political and business fallout. I mean, if you look at Canada right now, Canada's leaders are furious, right? Prime Minister Trudeau has called the U.S. tariffs, the Trump tariffs, unjustified, and now is moving ahead with retaliatory tariffs. Specifically, Ontario has even threatened to cut energy supplies to U.S. states like Michigan and New York, which is going to jack up their electricity prices. Mexico is going to be also doing something where the new President Sheinbaum has promised a response that's designed to protect Mexican businesses and trade interests. And then you have U.S. businesses that are scrambling. You got retailers, automakers, manufacturers. They're all trying to figure out what the heck is going on. Some are considering supply chain shifts to reduce their exposure. It could get kind of messy. So where do we go from here? The markets hate uncertainty, right? And right now, investors are waiting for some sort of clarity for how long these tariffs are going to last. And we ask the question, will Trump walk these tariffs back? He has before. And I'm convinced that if the backlash is strong enough from businesses and political allies, we could see a rollback, especially if major U.S. industries start to feel some serious pain. However, one thing to keep in mind is that Mr. Trump doesn't have another election. So the difference between the first term and the second term was that, Trump had something to win. He had something to gain. He wanted to win the election again, so he had to, be careful. Now, he doesn't have another election that he can win, right? There's nothing to win. He's done. He's been put back into the White House, right? And he can't win again. So who cares? Who cares what you think? Who cares what I think, right? So therefore, you kind of have we don't really know. It is true that Trump would normally be constrained by normal political proclivities. However, when we don't have any election awaiting because of imposed term limits, now we don't know if what's going to happen, right? So you got to keep that in mind. Right? So there is that. Yes, Trump could walk these tariffs back, but he doesn't have the same incentive that he did last term because he won't get elected again, so it really doesn't matter what you think, right? So I think for investors, this is a pivotal moment, obviously, but at the same time, we've only seen, relatively speaking, you can look at certain areas like, say, Tesla, which has been hammered, lost all of its, post-inauguration gains already. You can see Bitcoin, same thing, lost all of its post-inauguration gains. So it really, we're at 3-month lows for these. So that's not something that you would think, oh, wow, everything's over. But, of course, prices could go lower, right? So it's a pivotal moment. What's going to happen here, right? So we really have a high-stakes geopolitical chess match playing out right before us. And when we look back through time, trade wars rarely produce any winners, I should say, right? They don't really produce anybody who comes out ahead, really. So continued volatility, very likely. Shifting global supply chains already happening. And potential economic fallout just kind of right around the corner. So what's the strategy? Well, here's my strategy. Volatility is not the enemy. It's the price of opportunity, quite frankly, right? That's how I look at it. So market swings are inevitable, but they're not going to change the fundamentals of long-term investing. So I plan to continue my regular weekly dollar cost averaging strategy no matter what happens with the tariffs, interest rates, or politics, right? I'm going to remain disciplined in my long-term approach. I'm going to stay focused on strong, high-conviction positions. And if prices dip on these high-quality stocks that I like, I see that as an opportunity to add more. Because new opportunities are going to emerge from this chaos. And we'll be looking for some discounted stocks. And we'll be looking for mispriced assets. We'll be looking for sectors that benefit from these shifts. But in the end, I continue to tell you, I continue to believe that patience and discipline win in the long run. So the short-term headlines are designed to keep you on edge. They're designed to get you worried. And I'm focused not upon these short-term moves or what Trump said yesterday, but instead I'm focused upon continuing to build my investment portfolio over the long term. And that strategy is not changing no matter what the Wall Street Journal has to say this morning. So I'm staying steady, staying focused, and we're going to keep moving forward. I encourage you to do the same.